welcome back, fail-safe investors. Welcome to Fail-Safe Wealth. If this is your first time visiting my page, my name is Terry, and like usual, we pretty much go through stock analysis and talk about stocks, and eventually my page will expand. I know I've been saying this for a while, and we'll get into like more things about finance, like real estate and owning real estate and things like that. But in today's video, I have a very special video for you. We're gonna pretty much compare a dividend stock to a dividend ETF. Now, if you don't know what an ETF is, I have made videos in the past on indexes, ETFs, and like ways to diversify your portfolios. I'll leave the link to those videos down in the description box below, but let's assume that you know what an ETF is. Pretty much it's the same thing as like investing into like a mutual fund or index fund, the same thing like that. The only difference being that you can trade an ETF throughout the day instead of versus like an index fund where you can only buy or sell at the beginning of the stock market opening or when the stock market is about to close around 4 p.m. So to make this video very simple, we're going to compare Simon Property Group, which is a REIT, but it is still a stock. Now, if you haven't seen the video that I've done on Simon Property Group, you can also go back and watch that video where I go into detail about pretty much the benefits of owning Simon Property Group and what things that I like about it and why I started to invest in Simon Property Group, ticker symbol SPG. So, Simon Property Group is a REIT, so that means 95% of its taxable income has to be paid out in dividends. So REITs generally have a high dividend yield already, right? So Simon Property Group, as of today, is selling for around $62 per share and has a dividend yield of around 8.25. Now, when I bought Simon Property Group, the dividend yield was around 11%, but I'm not complaining about that. So we're gonna compare Simon Property Group to an ETF that has Simon Property Group inside of it. So we're gonna look at an iShares ETF. It's called ICF, and it's pretty much like a realty ETF. They own a lot of real estate. But one thing that I should note, when it comes to investing, the lower the risk, the lower the reward. The higher the risk, the higher the reward. So there are ways that these two stocks, I should say, differ, even though they are kind of similar. So with the ETF, since it pretty much covers everything in realty and it has more than just Simon Property Group in it, it's a lot less risk, but it's also a lot less reward. So ICF, which is the ticker symbol, is selling for around $101 a share, but has a dividend yield or distribution yield of around like 2.7%. So that's a huge difference. So a very easy way to compare these two with a dividend would be to look at it as if you just had $1,000 to invest. So a flat $1,000 to invest. So if you invested $1,000 into Simon Property Group, you would get back $80 at the end of the year, paid out to you in dividends. Versus you invest in the ICF, you receive around $27 at the end of the year, paid out quarterly, split up. Not every dividend stock is the same. And in a situation like this, where Simon Property Group is undervalued, in my opinion, since it was selling around 200 at its all-time high and around 160 before the crash in March, it's still 50% below its trading average. So with Simon Property Group, not only do you get a bigger dividend, you still have the future of growth added to that company. Like once we are through this pandemic, there is a really, really good chance that this stock will go back up to $160 a share. So if you invest $1,000 at $60-something a share, then that's over $2,000 when it goes back up to $160 per share. So yes, there is some risk that Simon Property Group could go bankrupt, but the reward outweighs the risk, and it's, in my opinion, it's worth it. So sometimes in certain cases like this one, it pays to own one individual company or stock over an index or ETF. And that's just really the point that I wanted to get across in this video. I hope you liked this video. I hope it was informative. Hit the like button if you did like this video. Hit the subscribe button if you aren't subscribed to my channel. And let's do it.